Hello there, welcome to my channel. In this particular video, we are coming to continue our discussion on building the complete financial model and also perform business valuation on a set of Amazon financial statements covering from the period 2021 through 2023. Alright, so if this is your first time on my channel, please make sure you have subscribed to the channel and also consider liking the video and sharing it with others so they can also watch it and benefit. Alright, so we are going to continue with our balance sheet forecasting. So in my previous video, we looked at an introduction to the balance sheet of Amazon and we went through the various line items within this particular balance sheet. And so we are continue the discussion from there. And in this particular video, we are going to concentrate on how to forecast these items within the balance sheet. Now, having completed both the PPE schedule and the working capital schedule, we are now ready to make projections or forecasts for the balance sheet. And so let's get into business. Now, when it comes to the balance sheet, what we do is that we always make sure that we are following the basic accounting equation, and that states that assets is equal to our equity plus our liabilities. Now, this can be written in other forms, but for Amazon, this is the format that is being used here, and so we'll go by this format. Others might put it assets minus liabilities equal to equity or shareholders' equity. So that is also correct. But in this particular scenario, we are looking at assets equals equity plus liabilities. All right. So in order to always ensure that we are following this particular accounting equation, we need to put a check at the top of our balance sheet to ensure that at any point in time that is being followed. So I'm going to insert an extra space at the top here. So I'm going to do that. And I'm going to name this check. So let me italicize this. And then we are going to put a formula here at the top here at the beneath each year. And we are going to say that at any point in time, the total assets of a particular year must be equal to the total liabilities plus stockholders' equity, or the difference between these two figures must always give us 0. So we are going to have total assets minus total liabilities and stockholders' equity subtracted, and this should be equal to 0. Now there is an A there, we are going to remove that. So to remove that, we are going to hit Ctrl 1. This will open the format and then come to custom, and then with the custom here, I'm going to delete the A around the 0 there and hit enter. Alright, so that removes the 0, and then I can copy this to the right using Ctrl R. Alright, so at this point we can see that historically the balance sheet is balancing. Alright, now let me italicize this as well. Alright, so that is that. And then also I'm going to undo my freeze the panes and refreeze the panes so that I can be looking at my check. So selecting the assets here, I'll come to the view tab and come to freeze panes and freeze the panes and freeze the panes. Alright. Good. So we are making progress. Now let's continue with our major discussion for today. Now, when it comes to the balance sheet or forecasting the balance sheet, we need to be extra careful and pay attention to details because by the basic accounting equation, which serves as the basis for preparing this particular financial statement, the statement, as we have already looked at, must always balance. And so it is very important for us to be very careful when constructing this particular financial statement. Now, when you prepare the balance sheet and it doesn't balance, the time and effort it takes for you to correct the error that is making the balance sheet not to balance can be very daunting. All right, and this can keep you all night. So to avoid this strenuous task, one has to have a better conceptual understanding of the flows behind a balance sheet. And the key to thinking about the balance sheet projections is to understand these items' relation with our cash flows statement or the cash flow items. Okay, because cash flows affect assets, liabilities, and owner's equity items. That is to say that is spent is either used to purchase an asset or perhaps used to pay back a liability. Conversely, if a company receives cash, maybe it has sold an asset or raised funds. All right, so to project the balance sheet line items, we take each of the item and we need to ask ourselves two fundamental questions. Now, take note of these two fundamental questions. They are very important. The first one is that which cash flow line item or items are affecting the particular balance sheet line item? And then two, in what direction should this cash flow statement item be driving the balance sheet item? Is it increasing this balance sheet item or is it reducing it? Those are some of the questions we use when we are projecting the balance sheet. Now, when you watch my other videos on financial modeling, my full videos of financial modeling, the three statements financial model, the DCF model, you realize that I have used other methods of projecting the balance sheet items. And so there is no one size fits all situation when it comes to projecting the items on a balance sheet. So we can have various items. So this is another dimension I'm going to teach you in this particular video. So it is left for you to watch all my videos and then make the best judgment for yourself and pick the one that best suits your style. All right. Right. So the first line item on our balance sheet is the cash and cash equivalents. And so in order to forecast the cash and cash equivalents, we usually pick this directly from our cash flow statement. And so I'm going to link the cash flow statement, our cash and cash equivalent balance from our cash flow statement. So I'm going to have that. So for 2024 estimates, this is going to be equal to 78,689. So I'm going to have that, and I can copy this across using Control R and expand this to view that. All right. Okay, so that is the first one. Then we have marketable securities. Now, within the cash flow statement, we can find their sales and maturities, as well as purchases of these marketable securities. And so to forecast it, we are going to take the previous year figure from here, which is 2023, and we are going to subtract the sales and maturities figure from the cash flow statement. Now remember, the cash flow statement is what we are using to drive the balance sheet, and so most of the items you are going to be using are going to come directly from the cash flow statement. And when you look at this, you can see that they are all 0, 0, 0. The sales and maturities of marketable securities is 0. We are assuming that is 0, and then purchases are also 0. And so going back to our balance sheet, we can delete this reference to our balance sheet and assume that this is going to continue for the next period because the other items R000. So I'm going to copy this across. All right. Our next item is our inventories. Now, the format is going to follow suit as we did for marketable securities. So we're going to have equals our previous year figure, and what we're going to do is to subtract. Actually, when we look at the cash flow statement, the change in inventory from the cash flow statement is negative, which means that our inventories have increased over the period. And so actually, we are supposed to be adding this additional increase in inventory, additional or increase in inventory. But since the increase in inventory in the cash flow statement is negative, we bring this minus sign in order to flip the sign. All right, so don't be confused about that. And so we are going to select this and hit enter. All right, so that is our inventory figure for 2024 estimate. And I'm going to select this and copy the formula to the right using Control R. So these are our inventories. So what we just did is that we are assuming that inventory for the next period is going to be equal to the previous year inventory, and then you're going to add the increment in inventory. As you can see on the balance sheet, these figures are negative because they have increased over the period. All right, we did that in our last video when we were looking at the working capital schedule. All right, so we continue to our accounts receivable. You should know that this is going to format. So you have the previous year figure, and then we are going to add the increment of our, so this is not add, this is going to be subtraction. And so we are going to subtract the accounts receivable figure. That will actually make it positive. All right, so let me delete this double reference here and hit enter. So as you can see, that is our accounts receivable figure, and then I can copy this to the right using Control R. All right, so that is that as well. Then quickly we can copy this sum formula from the right. So let's copy that and paste it to the right using Control V. All right, so let me expand this a little. Right. Okay. So I just resized the columns. So that is that for our current assets. Now we come to our non-current assets. For PPE, this will be equal to our previous year figure, which is 2023 figure. And we are going to add our capex, which is actually a minus within our cash flow statements once again. And so I'm going to flip the sign by inputting negative. Actually, we are adding our capex, all right? So don't be confused about the signs. When the figure is a negative figure within a cash flow statement, then we need to flip the sign because we are actually adding it. Capex is capital expenditure, additional capital. But in the cash flow statement, this is a negative figure. So to obtain the positive figure, which we are adding to the previous year figure here, we need to subtract it. All right, so I'm going to have that. So let's head back to the cash flow statement and look for our capex within the investment activities or investing activities. So that's the first item here, our capex. So I'm going to hit that. And then we are going to also subtract depreciation. Depreciation is a positive figure, and so we are going to subtract it, and that is found within the operating activities section. So this is our depreciation and amortization. So I'm going to subtract that. And then we are also going to subtract any sales of PPE. And the sales can again be found within our investing activities. And that is actually 0, but let's select that. And we are also going to add any acquisitions, which is also 0 here. Okay, so that is that. I can copy the formula to the right using Control R. Right. Operating leases. Now, for operating leases, we don't have any cash flow line item directly related to an item. And so we are going to leave this flat. So let's input 0 there, and then we can copy it for now. Now, as I already said at the beginning of this series, that when it comes to financial modeling, initially we make these simplified assumptions. As time goes on, and as we know the business model and what particularly they are going to be doing in the forthcoming years, then we can tweak these assumptions to reflect the reality on the grounds. Right? So that is what we do. Now, when you look at the operating leases figures historically, you could see that there is no way operating leases is going to be on 0 going forward. And so this assumption can be later tweaked. All right. So take note of that. We are going to assume the same thing for goodwill, since we can't determine if the business is going to make any acquisitions going forward. And then for other assets, this is going to be equal to the previous year figure. And then I'm going to subtract other operating expenses. Now, other operating expenses are directly associated with our other assets here, as we have seen in our previous videos. And so I'll come back to my cash flow statement, and I'm going to locate other operating expenses, which we can see here. So select this and I'll hit enter. Okay, then I can copy this to the right using Control R. And then with that, let me also copy this to the right using Control R. And then with that, I can copy this particular total formula here for our assets. So I can copy this and paste the result to the right using Control V. So as soon as I pasted that, we are here to deal with the liabilities and stockholders equity section. And so you could see that our balance or our balance check here. So this is actually, let's change this to balance check. All right, so you could see that our balance check immediately is showing the total assets of our balance sheet. Okay, all right. So let's continue to our liabilities and stockholders equity. So we are going to start with our current liabilities, and the first current liability item is our accounts payable. And accounts payable, now you should know that the liabilities and stockholders equity are the opposite of our assets. All right, so where we are subtracting the cash flow items, when it comes to the liabilities, we are going to be adding those items. All right, so let's go. So for accounts payable, it's going to be the previous year figure, which is 2023, and then I'm going to add the change in accounts payable in the cash flow statement, the changes in accounts payable. Now remember that our accounts payable has also increased over the period, and so it means that we have more liability, all right, to pay, and that is why we are going to be adding this accounts payable figure increment in our cash flow statement. All right, so I'm going to copy this. So let's do it for all of them before we copy all of them to the right. So let's do that of accrued expenses as well. So I have this, and then I'm going to add the changes in accrued expenses from within our cash flow statements. I'll hit that. And then finally, our unearned revenue. This is also going to be equal to the previous year figure added to the cash flow figure here, estimate, which is 2024, and then I'll select that. And then I can have my total from here copied to the right, and I can grab all of this, holding shift and then the right arrow, I can copy it to the right using Control R. Right. So quickly, I want to copy all my total formulas to the right. Copy this also to the right using Control R. And then finally, my total liabilities and equity to the right using Control R. Okay, so we are making progress. Then we also have long-term liabilities. So with the long-term liabilities, the first item is our long-term lease liability. And this is going to be equal to our previous year 2023 figure. And then we are going to add any principal repayment of finance leases within our cash flow statement. So let's come to our cash flow statement within the financing activities section. So we have principal repayment of finance leases, which we do not know. So I'm going to select this. And I'll hit enter. All right. And then for my long-term debt, that is also going to follow suit. So I have my previous year figure, and then I'm going to add any long-term borrowings or repayments. So I have this. So we have proceeds from long-term debt, which should be added. And then I'll also add that of any repayments of long-term debt. All right, so that is that. And then finally, I would also have my other long-term liabilities. Now, my other long-term liabilities is going to be equal to the previous year figure. I'm going to add deferred tax liabilities or deferred tax amounts within the operating section. So this is deferred income taxes. So I'm going to add that and also add any repayment of finance obligations. Now you should know that, as I said in my previous videos, we are going to now build our debt schedule, which is the last supporting schedule. And so when we build that, we are going to populate all of these items as well. That is if you are able to. All right, so for now, let us just select that. So we are going to have principal repayment of financing obligations. So I'm going to pick this particular amount here, and I'm going to hit enter. Let me check my formula. Okay, so with that, I can copy all of these three to the right using Control R. All right. Then lastly, we want to look at the stockholders' equity. So the first one is our common stock. All right, so when it comes to common stock and additional paid-in capital, we cash flow statement. So as you can see, common stock repurchased is 0 throughout. And so we are going to assume that the same procedure is going to follow on our balance sheet. So we are going to keep it flat as 0. I can copy this to the right. And for treasury stock, the same thing can be said about that. So we are going to keep it flat for now. We don't have anything relating to that within our cash flow statement. Now, as I said earlier, I have other videos on this particular three statement model as we are doing in this particular video. And so I have showed alternative ways of treating these particular items. And so you can watch those videos to also have other ways of projecting these particular items and not necessarily keeping it flat. All right. Then we also have accumulated other comprehensive income or loss. So that is going to be equal to our previous figure. I'm going to add effect of exchange rate on cash from our cash flow statement. So I'm going to scroll down, effect of foreign currency on our exchange rate. This is other comprehensive income item, and so I'm going to add that to that, and then I'm going to copy this to the right using Control R. All right, and finally I have my retained earnings. Now, as you can rightly guess, retained earnings can be calculated as the previous year figure. You are going to add our net income from the income statement, or to be consistent, we can pick it from our cash flow statement, which is at the very top. All right, so we have it at the top here. So we have our net income or loss right from here, and then I'm going to also add stock-based compensation. Now, stock-based compensation is being added to our retained earnings because we are assuming that the stock options are not yet vested. All right, and so we are classifying them under our retained earnings. If they are vested, we would have added them to common stock and additional paid in capital, but they are not yet vested. Okay, that's the assumption we are making, and so we are going to select this, and I'm going to hit enter. Okay, and then copy this to the right using Control R. All right. So as you can see, our balance sheet has not balanced because the cash flow statement is not completed yet, and we need to do other adjustments to this particular balance sheet. All right. Now, I want us to do two quick things here. The first one I want us to do is to format the font color of our hard-coded figures as blue and leave the formulas as black, as we can see here. So what we're going to do is select all the figures within our financial statement. So select everything, and we can hit F5. Hitting F5 will open the Go To dialog box here. Come to Special and come to Constants, and then uncheck Text, Logicals, and Errors, leaving only numbers, and then you can click OK. Doing this is going to highlight all our hard-coded numbers for us, and then we can change the font color. So come to the Home tab, under the font color, change it to this blue here. All right, so just like that, you are able to do that. And then secondly, what I want us to do, looking at the difference, the balance check difference here at the top, this is very huge, which means that there is a problem somewhere with our cash flow statement. So quickly, this is how you identify errors, and this is particularly the reason why the recommended method in this particular video is very important. It can help you to check your errors. So here we can see that we didn't input our cash and cash equivalents and restricted cash beginning of period figures. So quickly I can link those up from the down. So 2024 estimate is going to be 2023 closing balance here, and I can copy that to the right using Control R. Then after doing that, let's come back to our balance sheet and see the balance. So as you can see, this is our balance here. So that is that. And so in my next video, what we're going to do is to complete the supporting schedules, which is the debt schedule, and finally complete our cash flow statement and come and work on balancing our balance sheet. All right, so thank you very much for your time in this particular video. I hope you have learned a lot. Please subscribe to the channel if you have not done so, and also consider liking the video if you found it useful, and also consider sharing it with others so they can also benefit. All right, so thank you very much, and I will see you in my next videos.